Welcome to another week ahead interview where one of the Dukas Copy team talk to a trader or professional to get their views on what news and data releases will be shaking up currency markets this week. Today I'm joined down the line by Alessio Rastani, direct from London. Alessio, thank you for joining me. First up this week, we get the first look at how European economy is doing on Wednesday with European PMI. Do you expect to see contraction from the Eurozone, and how would this affect the euro?
Yeah, sure. Especially regarding the PMI from an economic macro perspective, I would say that since the industries involved in services and manufacturing in the Eurozone for the 14th month are still below the 50-point line, this would signify contraction. So in that sense, yes. But however, manufacturing PMI shows an incremental increase to just about 46 in September. So it's a slight improvement from August. Same goes with Germany and France, both of which, according to data, still remain below the 50-point line. So really, if that data is anything to go by, it would suggest that the Eurozone still remains in recession. However, I'd expect a slight improvement in the numbers in the PMI coming on Wednesday. Whatever the news is on Wednesday, I think it's going to be what's really important is how investors and participants react to the news. Just the reaction is going to be really important. So what I'm seeing there is if the euro-dollar breaks the previous highs of last week, the previous highs of last week were at 1.3140, around that region. If we break that level and go higher, this will be extremely bullish for the euro. The next important resistance for the euro will be the February highs, and that's going to be a very key resistance, by the way, at 1.3485. We also need to see if the euro can maintain itself above 1.2990 region this week. That 1.2990 region is going to be quite important. Looking at the markets from an Elliott wave perspective, now there are some people out there who follow Elliott waves, which essentially is a theory that says that the markets follow 5 sections or 5 waves. So the reason why this is important is because 1.2990 essentially is wave 2. So if we break that level and go lower, in other words, if we fail to hold that level at 1.2990, that's pretty bearish for the euro. Actually, that means we probably will go lower to the September-October levels at 1.28. It's also worth remembering a couple other things. The euro's positive correlation with the stock market has weakened. Now, I'm talking about the U.S. markets here. So usually the euro and the stock markets are positively correlated. But that correlation has considerably weakened recently, which is quite interesting. We've seen the euro rising and holding itself really strong despite the selling that's been going on in the stock market. And the stock market sold off quite nastily on Friday and Thursday last week. So really what happens to stocks this week is going to be important. And finally, this is a question I'm going to come to you later as well, which is the U.S. dollar. The U.S. dollar has a lot of support at 78, so that's going to be important for the euro as well.
What do you expect to see from the pound this week as we see UK GDP out on Thursday? And many analysts are expecting the country to be now out of recession. Would you agree?
Yeah, I mean, there's a lot of economic reports coming out that Britain has pulled itself out of recession. That's essentially what they're probably going to announce this week, that the double-dip recession that we thought we had is not as bad as we thought. Okay, so essentially what they're going to come out and say is Britain has pulled itself out of recession. I would take that kind of with a pinch of salt, because whatever these economists say about Britain being out of recession and all that, the question is, if you go down the street, Jennifer, if you go down the street and you talk to somebody in Britain, ask the ordinary guy in the street, ask the ordinary consumer in the UK whether we're out of recession, they probably would not agree with that. There is a sentiment in the UK that we're still in recession. We haven't come out of it. Whatever the economic report is about Britain being out of recession, I would doubt that it translates to the way consumers are seeing that, the way they're seeing in growth and spending, that kind of stuff. Now, looking at it from a technical point of view, I would say, looking at the British pound against the dollar, right now we're resting on the charts, we're resting on a 50-day moving average. That's a very key important level because a lot of funds out there use that level. So the pound dollar needs to maintain the integrity of the previous lows at the 1.5970 region. If we fail to do so, if we fail to hold that level, if we break below those levels, then we could see more selling pressure that will take us to the August highs of 1.59. However, if the reaction to the news this week is positive, if we rally higher, then we would actually need to we would need to see a break of the 1.618 level before we can get excited about getting bullish on the British pound.
And lastly, what do you see for the US dollar in the short term as US GDP is out Friday?
Now, the interesting point about the U.S. dollar, and this actually reflects on all the other currencies as well, in the euro and the British pound, is the U.S. dollar has a lot of support at the 78 level. Now, for folks out there, by support, I'm talking about the floor in the market. There's a very important floor in the market at the 78 level. So I think that's going to be very key, not just for the euro and the pound, but also for the stock market. Because if the U.S. dollar this week or this month at some point, maybe before the election, could be actually after the election, I think it's more likely. If we break that 78 level, that's going to be, of course, considerably bullish for the euro. So if the dollar breaks the 78 level and goes lower, that of course means bullish pressure, upward pressure on the euro. Now, having said that, regarding the stock market, that's a different story because, as I said before, the correlation between the euro and the pound, correlation between the euro and the stock market has kind of weakened. But I would need to see this week, whatever the numbers are on GDP this week in the U.S., whatever those figures are, we need to see that 78 level, whether it's going to hold on the dollar or not. If we fail to hold that level, if we break lower, you can expect bullish pressure on the euro. But if the dollar holds the 78 level and we actually rally from here, the dollar goes higher, then of course we're going to see selling on the euro. So all very interesting this week. I'm going to keep an eye on that.
Thank you, Alessio, for your great insights today. For a longer-term look at currencies, click back on Wednesday for a Targets in Focus interview with Navjeet Grewal. Take care.